We're joined by Doug Guthrie. He's the Professor of International Business and Management at the George Washington School of Business here in Washington, D.C. Doug, thanks for joining us tonight.
Thanks for having me.
So, Doug, according to the latest data, we saw that China's economy expanded at 7.7% last year. Is it safe to assume that 7 is now the new norm?
Probably. And the one thing that I would state here from the outset is that I think it's important to get some perspective on these issues. So capital markets really thrive on predictions and hitting numbers. And so we're worried that China is moving from 7.7 to 7.5, but we're still talking about 7.5 or 7.4 or 7.3%
in the grand scheme of
growth.
things, the growth is still very
robust.
Phenomenal. If you consider, I mean, the U.S. should wish to have such kind of GDP, but within the context of the China story, what is it telling us?
Well, I think it tells you that there is a major transition that's going on in China that is a transition from infrastructure and infrastructure investment-led development to consumption-led development. And that's a difficult transition. It's a rocky transition. China's going to get there, but it's going to take a little bit of time, and it's going to take some adjustments along the way. So we might see some dips in growth as the state moves away from state-led infrastructure development to a consumption-led development, but it's going to happen.
Well, you mentioned the consumption, and of course that is the new model to focus on the domestic demand. And one of the bright spots in the data was, in fact, the retail sales. They notched up a gain of 13.6%. Can China survive on consumption alone?
Of course, it can't survive on consumption alone. So there's probably a 10-year process that's going to be in play here. For the next several years, we're going to see a state-led process in which the state is going to continue to invest in infrastructural development, and they're going to kind of wean the country off of that investment, and at the same time try to promote consumption-led development. Now, consumption-led development is a little bit difficult in China. China has a history of being the highest level or second highest or third highest level of savings rate in the world.
Unlike Americans that like to spend.
And you know, we might laud them for that. I mean, that's not a bad thing. But in order to develop this harmonious cycle that economists talk about, where money in the economy leads to consumption in the economy, which leads to further growth, China needs to actually develop that cycle. And so it's going to take a little bit of time to do that. China actually has to build an infrastructure around healthcare, Social Security, and education in order to get people away from saving, because they actually believe that society can actually provide those outcomes. But you know, if we look at this 10-year cycle and the state kind of declining in its development towards its aggressive push towards infrastructural-led development and towards consumption, I think it'll happen.
There's been concern, of course, about the property market in China. What is your outlook on that, and do you think that the government should be intervening in any way?
Well, so there are a couple of things around the property market. First of all, I think that there are a lot of naysayers who have looked at this, and I don't think they fully understand how complex the property market is in China. So, you know, if you look at James Chanos and those who have really talked about shorting China on this issue, it's a little bit superficial in terms of how it actually understands China, that analysis. What you have to understand about China is that China is looking towards a 20-year process of the urbanization of probably another 200 to 300 million urban residents. And so, I mean, that's a group of people that is the size of the U.S. population moving towards urban areas. And so they've built a lot of infrastructure for that, and a lot of that infrastructure looks like it's empty and you know, just looks like glass houses.
So your outlook for the property sector and for GDP for the rest of the year?
Well, in the immediate term, it doesn't look so clear. But in the long term, if you look 5, 10 years out, I think what these guys have done in terms of building infrastructure is very, very spot on. These are intelligent planners, and they have an approach to planning that we don't have in this country. And so for 2014, you know, I think we're going to see a dip in the GDP estimates, and I think the property sector is there is a bubble that's coming, but I don't think it's nearly as catastrophic as most people think it is.
All right, we're going to have to leave it there. Thank you so much, Doug Guthrie.